This is the European edition of Breaking Banks, the world's #1 FinTech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving FinTech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the FinTech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing FinTech plays in the world today. Okay, let's roll.
Hey guys, welcome back to Breaking Banks Europe. My name is Matteo Rizzi. I'm the executive producer of the show, and this is a very particular one for this reason. And allow me to spend like a minute or two before introducing our guest. This is the last episode of the 2024 format of Breaking Banks, because as of 2025, after this, let's call it a transition episode, we're going to run a monthly Breaking Banks Europe, introducing a Breaking Banks Africa monthly episode, as well as with the amazing Paolo Sironi, continuing the Bankers Bookshelf. After the 12 beautiful episodes from Paolo. And now let's get to introduce for this news from the FinTech front, Anthony Day. Anthony from Portugal, let's say, so it's a UK citizen, Irish passport, living 12 kilometers from me in Lisbon. Anthony, welcome to Breaking Banks.
Hey, thank you so much, Matteo. Shout out to Paolo as well, if you're listening in, Paolo. I miss you, buddy. And yeah, let's just say we're just two Europeans talking about FinTech. How does that sound?
Absolutely. And by the way, a couple words about you, besides the fact that you run also a podcast, so shout out to yours. And please, by all means, tell us a little bit, where can we find your podcast as well?
Yeah, thanks, Matteo. So for those people who don't know me, I'm the head of strategy and marketing for a project called Midnight. We're a blockchain that's been incubated and founded by Input Output Group, the same group that brought you the Cardano blockchain. We are focused on data protection, privacy, using zero-knowledge technology to allow shielding, privacy, and compliant applications on-chain. So super important for real-world assets, super important for FinTech, super important for the future of identity, KYC, a whole bunch of the topics that we know and love in FinTech, but that maybe the rest of the world doesn't love as much as we do. But very excited to be a part of that project. And also in my spare time, when I'm not doing midnight work, I host the Blockchain Won't Save the World podcast. You can find that on all other channels, and we do LinkedIn Live as well. So if you prefer watching video, come check me out on LinkedIn. Please feel free to reach out and connect. And
how did you come with the title of the podcast, Blockchain Won't Save the World? That's pretty cool.
That's a cool question. It was a presentation I was giving, again, back in my IBM days, talking about how to think about the importance of technology in the world and the impact that technology makes. And the broader story was around digital transformation, ESG, and sustainability, insofar as saying that we have a number of different technology assets at our disposal, but technology in and of itself, and blockchain specifically, won't save the world. You, the people in the audience, the decision makers, the CEOs, the CTOs, are the ones who change the world by making important choices to invest behind transformation. And so the spin out from that particular presentation, I think it's still somewhere on YouTube. You can still go check it out. Anthony Day, London Blockchain Week. In that flow was Blockchain Won't Save the World. And that was the birth of the show.
Oh, congratulations. It's pretty cool. It's I won't say as cool as Breaking Banks, which,
definitely not as cool.
Only
cool, for sure.
Thank you. You're too nice. Listen, let's dive into it and let's talk a little bit about this sort of end of year forecasting 2025 in tech and FinTech. Let's start by talking about the investments, So not surprisingly, actually, because I think that the scene has been stolen by, something closer to your world in the last quarter. Not surprisingly, the investment sort of declined 25%-ish, more or less. It's like EU tech companies, right, like 4.2 billion, more or less, which makes 20 to 25, months on months a decrease. Certainly the world being busy with other stuff is one good reason. But what else do you think can explain that?
I think you're at a period now, at least in the world, and I know we're taking a European focus here, but if you think about finance and fintech, there's always a view across the pond. There's always a view towards America and what's going to happen in terms of new policy, in terms of new regulation, in terms of austerity versus spending. I think we are about to enter a new era of the world, whether we like it or not. Trump, the second coming, or the second presidency, is something that I think anybody in any part in any industry, and it's felt especially strongly in Web3 and blockchain and crypto right now, because this feels like the unlock for us. Finally, we have a president who understands us, who's supportive of creating regulation and a positive environment for innovation around the use of decentralized technology. I wouldn't be surprised if you're not feeling the similar sort of let's wait and see in the markets in and around fintech. And I don't think it's a terribly bad thing to see the bar raise a little bit in terms of investment. I don't think we necessarily want to see capital flowing to bad ideas and willy-nilly all of the time. I think we still want to see increasingly rigid and well thought through investment theses. But I think probably an interesting observation, the same bar being raised is true of Web3 today. And I'll use Web3 as a blanket term for technologies and projects and businesses that are making use of blockchain technology, tokenization, cryptocurrencies, etc. Distributed ledgers, even if you want to go there. The bar has been raised insofar as projects that have been launching or that have been looking to raise funding or that have been through some sort of token issuance. In most cases, people are still asking today, how many Telegram users do you have? How many transactions do you have on chain? How much value is locked in your ecosystem? And you're seeing some really impressive figures, even on test nets, of hundreds of millions of dollars being committed to some of the recent launches. And you think, that's phenomenal. And previously, all you would write as a white paper, put some ideas around how you were going to bank the unbanked or transform digital identity for the world, and suddenly, $100 million worth of capital would flow you away. And we've been burned by that. It was too easy in Web3 to see that sort of investment come through. And as you've started to see, now we're in the thousands or maybe even tens of thousands of blockchain layer ones and layer twos, and it's very hard to discern the difference between those projects that are appropriately funded with a good mission, with a good vision and values, and those that are genuinely driving change and onboarding the masses. Even some of the most well-known projects, Polygon's initiatives with Disney and with Starbucks of 2-3 years ago in the previous cycle, have since been dismantled and turned down. And those were some of the biggest, most positive movements at the time. So
basically, what you're saying here is that that money, of course, the number we talked about doesn't take into account other buckets of money, that might have and have flown, into the space. You probably, I want to say that when that 25% is like one project in 4. That seems like a good statistics of which type of let's say closer to Web3 projects we're seeing as an investor, isn't it?
I'd be interested to see the analysis of, have we seen an increase of inflow into fintech alike or fintech lookalike projects in Web3? Is it the same VCs? Are we seeing other investors or other investment dollars coming in? It's not all retail all of the time. We know that, but we also see that well-established projects are being funded and we're seeing strong progress. So yes, the metrics can be botted. Yes, transactions on chain can be manipulated, as can fintech valuations, as can,
totally.
Front ends and back ends be patched together with sellotape. We've seen that for decades. That's not new. I think it's more just a case of saying that the burden of proof is higher because we're actually maybe seeing the cost of that innovation or the cost of spinning up a fintech type of business becoming much, much lower in terms of the capital raise, in terms of the modules and the SaaS components you can plug together. You're seeing more projects, more opportunities, more places to invest your money. And maybe people are just waiting to see.
So, Anthony, I don't think there is one show that is talking about like what's happening in Europe in the tech/fintech space that is not talking about like a Bitcoin, reaching the 100K milestone. And I want to try to get the spin a little bit different. You talked about, the fact that the new, Marvel couple, like the two superheroes, like Trump and Elon together, Of course, they gave a great boost. Okay, fine. But not surprisingly, after the peak has reached, somewhat it was a bit of an inflection point, and the consensus seems to say that we are far from reaching the peak. So this is my analysis, and we have to take a bet, right? So my bet is that we're likely to get another a correction, an important correction in the first half of the year, and then the peak is going to be probably after summer, if Trump does only a third of the things that he said he would do. Then we're talking about the true bull race not happening again. That would be my analysis, and I'm curious to have yours. And of course, this is not an investment advice. We don't give a shit. We can be wrong. Okay. It's pure freedom of speech here, and I'm curious about how do you talk in your podcast about it. So please bring your experience of your other conversations.
Yeah, that's an interesting take, and I think it's probably fair to say we're not going to see a strategic blockchain reserve within the first 30 days of the Trump presidency. In the same way, we're not going to see meaningful regulation of crypto assets in the United States in the first 60 days either. These things will take time, but there is goodwill to see them come through. I would, as with everybody else, probably be appropriately cautious in terms of any politician saying, this is what I'm going to do to win your vote versus what I actually deliver later on. But at least we know we've got a chance. And I think a lot of the positivity from the last few weeks, end of 2024, was at least it can't get worse. Yeah. Right? We're going to see Gary Gensler out of the SEC. We're going to see potentially more balanced involvement from regulators and politicians in giving this technology a fair chance at innovation. That's all we've ever really asked for, right? Whether Trump drops a new NFT collection in 2025, I could care less. That's not my business. What I want is that the projects that are building on decentralized infrastructure, the projects that are building on blockchains, which are separate but linked to Bitcoin as always, because oftentimes Bitcoin's value and market cap is associated then to reinvestment in new projects. So those two things are linked to some extent. But what I want to see is a fair chance for those people building on decentralized infrastructure and building with tokenization or with AI agents that have some component of decentralization with them to have a fair chance at transforming the world. They can't do that if their hands are tied behind their back or if they cannot appropriately have clear regulation in order to play. We've seen MiCA come into force now, back end of 2024, I think 30th of December, at least, now we're in the era of MiCA where there's a chance to see fairer regulation or more transparent regulation of crypto assets, crypto asset businesses in Europe. That hasn't been tested under litigation yet. So we're still a fair way away from the next cycle of that regulation evolving also. But you can't help but be positive that at least that gives us a chance. And to that end, right, whether we start seeing more investment and more activity flow into Web3, as a result, higher market caps of projects in Q1, Q2, Q3, Q4, I care about Q4 2027, 28, right? Because digital transformation always takes 18 to 24 months at the fastest to really move the speed of traditional business. Crypto and projects and tokens and NFTs and agents can move overnight. But the actual moves, the mass adoption, the real transforming the world takes a little longer.
I have another a piece of the mosaic to add to this, which is something that I've been involved personally, so I can share. I've been close to the spin-off of Bitpanda, called Bitpanda Technology Solutions. That is not a new company yet. It's just like a new sort of business that Bitpanda as the marketplace is launching. And, I've been helping them, with a couple of conversations with banks that I know well. And it's incredible how financial institutions that were, absolutely on the conservative side, they are now realizing that if they don't want, their high net worth individuals that do have some of the, some crypto in whatever, when we're talking about truly high net worth individuals, even a small chunk of it is still significant. But most importantly, it gives an opportunity for them to go somewhere else, right? If they cannot have their crypto in the custody of their financial institution. So for having participated into a number of conversations, a bank will not become a crypto custodian overnight, right? But the moment that they do, they switch on, a flow of new assets that can be significant very quickly, for the market. And I agree with you. This might not be a quarter conversation, maybe a couple of years conversation, because they'll probably take, another couple of quarters to realize they have to do something, and another year to get the infrastructure ready, and another maybe a couple of quarters to get the customers in. But in 2 years, this is where we're going to see a significant markup, right?
I think, again, we've got regulated assets that are clear in the eyes of regulators in the European market and hopefully soon in the United States. The so what here, and maybe let's pick on Revolut, right, as an example, because they're in the news recently as well. Yeah. Revolut have a crypto treasury function inbuilt into their app. If you're a small business and you're holding a bunch of cash, your traditional options were, possibly some bonds, some sort of indexes, some index funds or something like that you might be able to have in app, but it was painful and clunky and difficult. Right now, you can convert whatever you like, anytime you like, straight to Bitcoin, from euro to Bitcoin tomorrow, or Doge, or I'm not saying it has to be Bitcoin all the time, but pick a crypto asset or particular asset that you like, and instantly you've now got access to funds from small businesses and large businesses alike into treasury at the click of a button in an app that people can move and use on the fly. That's really, really powerful. Now, I don't expect to see that in the Bank of Ireland app anytime soon, right? But that's moving capital quickly. And so that's good news for Web3. That's good news for people who want to make more of their reserves. That's good news for banks who now, okay, yes, they'd be sitting on the assets, but now they're sitting on the assets and fees at the same time. Right? Totally. These are new business models. And let's not get into, banks have always traditionally wanted to capture the 18 to 25-year-old market, even before then, but, these guys who are pre-mortgage, but maybe have a little bit of capital. How many crypto millionaires are we likely to make over the next 1, 2, 3, 4, 5 years? And the reality there is that these are the exact prime customers. And they're not going to be going and staying in traditional banks. They're either going to be self-custodying or using a familiar bank that has the UX and the experience that they want, but the services that they also need, because they're now crypto native and they're wealthy. And so Absolutely. The opportunity for banks and fintechs is clear.
By the way, you talked about Revolut. One of the news I saw recently, they reached 50 million clients. They are getting, they are growing steadily. And frankly speaking, and you might not know that part of my own story, but I've been following Revolut since Nick and his two co-founders back then at InnoTribe, at Swift. We are talking about the very, very beginning of them, and aside their spectacular growth, but not a lot of people would have bet into them being a good survivor, because they had this sort of aura of being almost too disruptive, right, in the market. Not to say a more colored word. And all of a sudden, they become solid. And I think they are one of the most flexible and quickly to adapt. In maybe try and fail as well, but mostly try and succeed. Though, I'm curious about what's your take. I'm a client, and my 21 years old is a client, and he was saying, "Listen, Dad, I want to start to invest in some crypto." And Revolut does it. So for him, it was all seamless.
That's your gateway. That's an easy gateway. They made the user start with the user experience, right? This is your ability to get access to a different asset class. Granted, this is not the decentralized internet, right? So you're not using your digital identity. You're not making use of smart contracts. You're literally just buying and selling digital assets in the same way that you might consider stocks, right? Cryptos in this context are analogous to high growth tech startup stocks. And that's the experience we're delivering here. But if this is where they start, where do they go next? That's the interesting part for me, because we're starting to then get into tokenization of other asset classes that could be made available through the Revolut app that may streamline the experience. It's not because they're tokenized that they're suddenly sexier, right? Tokenized gold or tokenized real estate isn't a more performing asset necessarily compared to it being non-tokenized, but the ability to put that asset into different channels and to attract capital moves much faster. Right? One of the early use cases around using distributed ledger technology from my time at IBM was creating a digital marketplace for commodities that were relatively illiquid. And you create the infrastructure to trade, and you put it into the hands of a fantastic marketing team like Revolut with a brilliant user experience. And you suddenly have retail customers and small to medium-sized enterprise customers investing in diversified asset classes, maybe even with some sort of automation behind it. You could put some bots behind there very easily, and suddenly you might start issuing assets through the same platform, and very quickly Revolut now has 3 or 4 or 5 new business lines that are very profitable and with 50 million customers.
But by the way, Anthony, I don't know. I think I saw it today. I mean, maybe it was like one of this many like a TikTok reels. So it wasn't, the guy didn't use TikTok to spread the message, but it was, one of the people I follow, the CEO of BlackRock. Today, I saw a reel today. It was saying, 100% of the assets will be tokenized in the future, because it's a way, to broaden the access to it. And I was thinking, oh my God, but this BlackRock is start thinking about it and talking about it publicly. That's we are only at the beginning, of the change, don't you think?
Let's take the blockchain out of it for a second, and let's just talk about being able to have automated, always on, fully transparent, regulatory compliant markets that are global, borderless, and able to be connected to via API. This is kind of what, and remember back in the day, PSD2, right? Yeah. I always hark back to PSD2 because I think the open banking movement in Europe broadly was some of the finest regulation I've ever seen. Not because of that it was well written, but because of what it enabled. It enabled openness, it enabled connectivity, it enabled FinTech by API and access to the bank account. It destabilized the banks somewhat, but then forced them to up their game. This is exactly what this experience does. That's what tokenization does. It's what blockchains do. Now, I said compliant up to a point. There is also a significant challenge in and around financial markets around the transparency of blockchains. Yeah. Right? So with most public chains, you have pseudonymized identities, but that are relatively easy to figure out quite a lot of the time, particularly when you're seeing large money movements, or even when those organizations have to disclose their identities, even to counterparties. That then enables anybody to see any transaction of any value in the counterparties, albeit pseudonymized, anywhere in the world, anytime. And a lot of the financial service industry feels deeply uncomfortable about that. Oh. And a lot of individuals feel deeply uncomfortable about that. And so we are, as yet, probably one technology step away from seeing much wider adoption of tokenization, and that's around shielding of sensitive data or privacy. And shameless plug, but this is what we work on with Midnight, is around being able to use technology called zero-knowledge proofs to validate data without sharing sensitive data, or to validate a transaction without putting all of the data and metadata visible on-chain for everybody to see all of the time. What that allows you to do is you can have the same borderless 24/7, always-on automated markets, but have the ability to shield sensitive data and then selectively disclose that data either to third parties or to regulators or to auditors or to whoever you need to as part of the total application experience. That, in our view, and in terms of what we're seeing from banks and governments as well, is the final unlock, right? BlackRock have teed it up. BCG said $16 trillion of assets would benefit from tokenization. We're not quite there. We're not going to see $16 trillion of assets on Ethereum tomorrow. But with the enablement of projects like Midnight and Zero Knowledge, That's where we get to next. And that is transformational for everything.
By the way, Anthony, I was thinking, and I was actually hoping for you not to mention this, but you haven't, so it's great. I think we need to congratulate ourselves because we managed not to talk about AI for the first 30 minutes of the tech podcast. So none of us actually pronounced that the two magic words. Yet I think that in a fair sort of wrapping up of 2024. I would like to talk about one thing, which is a fact. So without getting too much into speculations, is that like Microsoft announced 80 billion investment in AI in Europe, and all of a sudden, by magic, that was a nice boost for all like the semiconductors. Exactly, they all exploded. But that means that we're going to get good quality trained AI in EU. Do you see this like AI polls, around the world? That because another interesting thing is on AI is that I was at Cybos in China. That was in October, and curiously enough, China is way ahead in terms of like full blown innovation and IP registering. For related to AI, like every 10. New IPs on AI, over 50% of them are coming from China. That was, I think, the unprecise statistic I remember, but it's like close enough. And all of a sudden, it seems like Europe, surprise, surprise, we were a little bit behind, caught in between US and China. And this still like a drop in the ocean. But how do you see this market evolving, especially because you're dealing with a lot of data, right? So it must be a topic that it's a daily consumption for you.
It's a fairly regular occurrence for us at the moment.
Yeah.
Okay, let's do a very quick deep dive into AI because I think there's a few places where this plays. I think what we've seen so far is the oligopoly approach to AI, which is who's got the best AI product, and you go to that product for AI. It's Grok, it's ChatGPT, whatever it is. You go to that place, and that's where you get your AI. What I think you see next is the SaaSification and openness of AIs, which is AIs on command, race to the bottom, cheapest possible AI that you can program and prompt to do whatever it is that you choose to do, and then it becomes about applications. And those AI applications are as valuable in a closed source, closed domain, internal intranet type of mode as they are in the world of global, interconnected, decentralized, always on digital asset finance. Now, I think the interesting things for me is the people say that the public data models are running out. So you end up having potentially significant value in private data models where you have monetization of sensitive data. And this is something we're focused on quite a lot, is being able to allow people access to inferences on sensitive data without actually sharing the sensitive data itself. This is where zero knowledge is a hugely powerful tool because you can query the data without actually seeing it. And you can do that in a decentralized way that's fully transparent, where you can track the logs and the activity. And for example, healthcare data sets that exist from governments. They take the UK, the National Health Service, if the UK still includes it in Europe. But the National Health Service is a public service, but has huge amounts of patient data, metadata around conditions, around health, around recovery, around efficacy of drugs, and so on. They cannot share that data with anybody else. They're legally bound to keep that data protected. But what if a company that's looking at healthcare innovation was able to query that time series on a regular basis? The NHS could monetize the data, could find a way to create additional revenue streams. They need it at this point in time. It's a very expensive business.
It's a little bit like the synthetic data market, with the difference that instead of being synthetic, they're actually based on real assets.
100%. It's the shielded data market, right? Think of this as the Airbnb of data now. All of that data you couldn't access before because nobody would dare put it into remember all of the data marketplaces that everybody said, we'll all put the data in the marketplace and everybody will use it. They won't, and they can't because it can't leave. We're seeing the next generation of that enabled by by sort of decentralized and ZK technology. And that's something that we spend a lot of time talking about. I think we've got to talk about AI agents as well, and agents operating on behalf of people, particularly in the fintech space, right? One thing you want people that people will do is, hey, robot, make me money, right? Let's be clear. They're not going to go to a stockbroker, or rather, they will now be given the choice. Or, do they want to go to a stockbroker? Do they want to go to JP Morgan GPT? Or do they want to go to Degen GPT and ask, the crypto AI agent to go and invest a certain amount of money in those particular products or in that particular
But you know
industry?
what, Anthony, like AI making you money, I think that, and I've been experiencing it no longer than a couple of days ago, I all of a sudden realized that I was getting, too much spam, and I was actually every week I was dedicating a couple of hours to read the 10% of email that actually matters, of my inbox. And so maybe I can help, and I went into searching a couple of tools. But then all of a sudden I realized, wait a second, for AI to be able to understand my email, the first thing I need to do is to be completely naked, and give them access, to data that are potentially super sensitive. And I don't think that people today are mindful of what that means. So
even
today
close.
they just see the benefit. In my case, they would just see the benefit of, oh yes, all of a sudden my inbox will come, instead of having 300 emails, it will have the 45 emails that matter, maybe not. But that means also that someone, has a complete view of also the things that matter to me, right? So that education, in my opinion, is what is really missing so far.
For sure. And let's be clear, we're still behind on financial literacy, let alone technology literacy. And then if you have to add into that security and self-custody, when we're talking about Web3 and decentralized applications, there's already a big stretch. And so, as I said before, the SaaSification or the appification of these experiences is going to be important. And whether you like it or not, Microsoft is going to have its version and Google's going to have its version too. But as you said, the ability for private agents to act on behalf of users while also making sure that they're not leaking data to the world, critically important. Because whether we like it or not, we've normalized the sharing of sensitive data in exchange for services or exchange for goods. Right? People who want to sell us shoes, they don't care to hold a copy of your driver's license and have to have a compliance team of 20 people and an annual budget of Four Eyes security of hundreds of millions of dollars just to sell you shoes. They don't want it. We have found our way to this place by maybe poor design or not having the right technology at the right time. We can do that differently now. And I look forward to it because I think as soon as you start seeing the business cases for not holding sensitive data, as soon as you see the reduction in cost of compliance and data governance spend being reallocated towards technology innovation, that's when we win. And that's not too far away.
Anthony, I think that our time is up, and I think is it is a good moment to wish for both of our podcasts, a new amazing 2025 season in our respective setting. I look forward to having you more. You're always welcome into Breaking Banks Europe, and also talking about financial literacy and financial inclusion. I'll count on you to come and talk at the Breaking Banks Africa as well, because there is a huge actually a role that Web3 is currently playing, in emerging markets.
Big time.
It will be a very, very good topic to talk about. And in the meantime, Anthony, thank you very much for being with us.
Grazie, Matteo. Thank you very much. I've enjoyed the conversation immensely. Please, anybody who wants to come check me out on LinkedIn, please do reach out. Always happy to connect. If you want to find out more about Midnight, just go to midnight.network and look forward to the next show, Matteo. Thank you.
Great, Anthony. And guys, this is a wrap.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.